Hello, everyone, and thank you for joining me. I think it's a very timely video to make when it comes to discussing major events in real world oil prices. As you can see here, this is the only chart I'm going to share today, and I think it's really important we talk about this. We live in a very volatile time right now when it comes to oil prices and a lot of geopolitical risks. We see essentially as I speak, as I make this video, we see a very challenging situation in the Middle East where Iran just a day ago um, they attacked Israel by sending 181 ballistic missiles, and we're at the phase right now where Israel is supposed to retaliate. We don't know what that's going to be. There's lots of speculation that it could be nuclear sites, lots of speculation it could be oil infrastructure and facilities, and it could have a big impact on oil prices. So we see a lot of volatility. Iran is a major oil producer. They produce about 3.2 million barrels a day. And so the question is basically what happened historically and how historic events affected oil prices. And as we move forward, what do we need to know and learn from history about price volatility and how various events impacted oil prices? So what you basically see here is a chart of historic events and major events in real world oil prices, 1970 to 2005, and the source is EIA, Energy Information Administration. And let's talk about the various kind of events that took place, and hopefully you find value in that. Let me know in the comments if this is useful. So if we talk kind of holistically a little bit more about how oil prices are being determined, basically it's mainly supply demand, right? So if there is high supply, low demand, prices go down. There is high demand, low supplies, prices going up. But at times, you can have events where, weather events or geopolitical events where those could impact oil prices because of the supply demand dynamic that changes. And those additional factors contributing to oil prices could be weather related events like hurricanes. So we've seen such event here, extremely cold weather in US and Europe between 1996 and 1998 timeframe. You can see a spike in oil production in oil prices that took place. I think it's about $5-6 here. So that happened historically, and you can have war and political unrest in some major oil producing regions, exactly like what we're seeing today, but we just don't know what that impact could be. And some of those events, as you can see in this chart, were basically the 1973 Arab oil embargo, the Iran-Iraq war that resulted in significant decline in oil prices, going essentially from kind of mid 80s, collapsing to 20s. But because of the Arab oil embargo in 1973, prices went up exponentially and then corrected a little bit and then went up again. And those are kind of the mid to late 70s timeframe where it was very challenging economically in the United States when it comes to inflation and people kind of ability to sustain energy security in a sense. Then Iraq invaded Kuwait. You can see that oil spike basically going from mid 20s, basically close to 50. So that's a substantial increase in a very short period of time. But when the Gulf War ended, you saw a same response downward to basically the baseline where the price was like $22-23 US, right? So and then extremely cold weather resulted in a little bit of a spike production, and then when the weather corrected, the weather resulted in typical weather, oil prices declined. And obviously attack on the World Trade Center, 9/11, 2001, significant decline. That's mainly because of consumption, people not flying, not utilizing as much jet fuel. And then when things kind of got a little bit more normal over in the recovery phase, just like we had with COVID, and people kind of slowly returned into functioning and resulted in flying, we saw that essentially, decline, but that also resulted in decline in oil prices, therefore kind of induced a little bit of a demand because people could afford, to fly cheaply in a sense. And oil prices essentially increased to kind of the mid 40s. And then we had a second Iraq war, George W. Bush, right, basically going to Iraq, which resulted in another spike. So various interesting events, very impactful events, and I think those are important to consider how historically the various events impacted the spike in oil prices, right? So on the y-axis, so we talking anywhere in the range between $10 in the early 1970s to mid 80s, when towards kind of 1980, 1981, when it comes to the oil Arab oil embargo that lasted for many years and then essentially collapsed during the Iran-Iraq war, where kind of the OPEC's ability to sustain, to maintain regulation of oil production or supply demand is basically was compromised in a sense. So let's kind of talk a little bit more about you know we covered that oil prices could be impacted by weather related events, by war and political unrest in major oil producing regions. But we also kind of talked a little bit about OPEC, which stands for Organization of Petroleum and Exporting Countries. And this is an organization that's trying to basically regulate oil prices and avoid catastrophic drops, just like we had during COVID, where oil price went negative to minus 37. Um, and the value, typically is in US dollars, right? So, and the currency at which crude oil is traded globally, which is US dollars. So, because gasoline is refined from oil, the price you pay at the pump generally follows the ups and downs of the oil market. So, often you will know, like, if oil prices collapse, you should expect lower gasoline prices. And this is kind of like the supply demand and of the products in relation to the oil, right, price. And when it comes to OPEC, so what is OPEC? OPEC is, as I mentioned, is a organization of petroleum exporting countries, and those exporting countries are basically like countries like Algeria, Angola. You have Iran there, which is very important to consider right now, because the production, as I mentioned, is 3.2 million barrels a day. And right now, if Israel retaliates with oil infrastructure, what does it really mean when it comes to the impact on oil prices? I mean, are we going to be seeing one of those spikes like we've seen in the past? I mean, this is like a war situation, that a war like the Gulf War lasted for some time, right? I mean, the Iran-Iraq war lasted for some time as well, as you can see in the time frame, and the impact on the decline in oil prices because of that instability and the inability of OPEC basically to control that supply demand. And so at least that's my understanding of what took place here, and that's why we saw the drop, plus the economic downturns and the challenges in kind of the you know early 80s. And I think one could argue, maybe because of recessionary fears right now, maybe we're kind of heading in that direction. But China did start QEing essentially, and the cutting rates. And so we see Jay Powell cutting rates by 50 bips. Canada already cut by 75 bips and about to cut more now in October as we speak. And so, you know, this is kind of interesting dynamic as it related to what's going on right now. And of course, within OPEC, we have Kuwait, we have United Arab Emirates, we have Venezuela, which has, one of the largest reserves in the world, right? And but there are lots of geopolitical, or inner political in the country issues there, right? With the government and instability there when it comes to investment, where many companies got burned historically operating in Venezuela. So OPEC also, they produce significant amount of production. I think it's could be over like 40% of world's crude right now. United States obviously is one of the biggest producers. They produce about 13.2 million barrels a day, but a majority, of the production is coming from OPEC. If you combine all of, if you combine Saudi and UAE and Qatar and Kuwait, right? You start combining all that production, it's fairly significant. And more than two-thirds of world's estimated crude oil reserves, right? And if you kind of start adding OPEC plus, right? If you kind of get Russia in there and all that, I think Dr. Anas posted just recently that the reserves are like close to like 87%, right, of world's reserves. If you think about this, Canadian reserves, they're about close to 9 to 10% of world's um, reserved. I think it's about 172 billion barrels, where 168 billion or so it's Canadian oil sands, and 80% of that is in situ. So I talk a lot about kind of the bitumen angle here, but reality is OPEC plus has majority of the reserves in the world, and so they're basically able to secure fair and stable prices. But obviously, we could have events just like weather-related events or war and political unrest in major oil-producing regions, just like what we're about to witness now. We just don't know what's going to happen that could impact the price volatility. And the idea there is that they want to, the idea is OPEC supposed to kind of secure fair and stable prices for petroleum producers and efficient and economic and regular supply of petroleum to consuming nations, and that fair return on capital to those investing in the industry. And very often we would hear that they want price stability, but they also want to incentivize investment into the sector, so then production could meet kind of the demand in the future, right? So if we think about what is world price for oil, the crude oils command different prices because they vary in quality, which also means that value of products that can be made varies from crude to crude. In my previous video, I talked about the different kind of benchmarks. I talked about Brent, WTI, Western Canadian Select. So you can watch that video and get better understanding how crude is priced. And so one of the uh, benchmarks for pricing is West Texas Intermediate, so WTI. That's a very famous benchmark price for oil, and this is relatively expensive crude, and its price is higher than price of much of crude in Alberta, as an example, right? Because first of all, it's lighter, it has better access to markets, and it's excellent for extracting larger portions of gasoline, for example, or larger portions of diesel oil, and heavier crudes like WCS crudes will have more of the heavy components or residual oils, heavy fuel oil, and asphalts and stuff like that, right? So, but regardless, if we have demand impact, WTI will drop. If we have supply impact, WTI also will drop. So this is something important to consider. So out of this list of the various events here, I really wanted to cover probably the most important one and just kind of give reference to what took place is the 1973 Arab oil embargo, and just talk a little bit about that, and tell you the reason to why this took place and how it transpired. I don't know if it's translatable to what we're seeing today or any scenarios that could unfold in the future, but I think it's really important to be mindful of how this type of event essentially takes place, where oil goes from $10 to $80, in within like 10 years or so, right? I mean, think about this. Like if you live in that time frame, all you see is oil going up and up and up, not on a daily basis, not on a weekly basis, not on a quarterly basis. It's just like for 10 years and then collapses, right? Think about the impact it could have on investors, that you finally convinced that oil price is going higher and higher, and now you end up kind of being financially impacted on the negative side. So let's talk about what took place between 1973 and kind of 1974 timeframe. So you essentially had the Arab-Israeli War in 1973, and the Arab members of OPEC imposed an embargo against US in relation to US basically deciding to resupply the Israeli military to gain leverage in post-war peace negotiations. And so the Arab OPEC members, they extended the embargo to other countries and supported basically all countries that supported Israel in a sense, right? So those countries like Netherlands or Portugal, I think South Africa was there as well. And so the embargo both banned petroleum exports to the targeted nations and introduced cuts in oil production. And you can imagine, like, all of a sudden, you don't have very stable oil. Your energy security is basically zero at that point, where you had a very steady supply, but now several years of negotiations between oil-producing nations and oil companies already destabilized a decades of oil prices system, which basically made things even worse on the embargo effects, right? And this resulted in significant kind of instability and need for energy security, but in a sense, it had a significant impact kind of on the consumer, right? Where people, I remember like reading stories where people will just like return cars because they couldn't afford gas. So hopefully, this was useful to kind of better understand the impact. As you can see here, weather events, wars have significant impact on volatility, and it's very hard to predict. Very often those things move very sharply, so it's very difficult to forecast what may happen today as we speak about the current conflict. I hope for peace. I hope for um, for Israel to get its security, and basically the everyone to kind of for things to come down and for countries to kind of move forward on economic progress. But unfortunately, we live in a time where you have entities like Hamas, like Hezbollah, and Iran just shot. I don't know. I think they kind of miscalculated here. I don't know why they had to do it, but I guess maybe there was pressure on them post the Ismail Haniya and Hassan Nasrallah assassinations, obviously, and obviously Israel winning, which is a positive. So hopefully you learned from this. Let me know in the comments if you have any other events where you saw oil prices increase or decrease significantly, and what you think is going to happen in the upcoming weeks when it comes to oil prices and all of those recent geopolitical events that we have been witnessing. Thank you so much.